All right, what a week. It's been pretty tense out there with all this geopolitical heat clashing right up against some big corporate news. So today, we're going to break down exactly what was moving the markets and, more importantly, what to keep an eye on next.
You know, there's this old saying on Wall Street. It's a bit of a classic. The idea is that markets just totally overreact to conflict, right? They price in the absolute worst-case scenario. And when that doesn't actually happen, stocks snap back, and boom, you've got a buying opportunity.
But this time feels different. With the US and Iran conflict now dragging on, everyone's asking, does the old playbook even apply anymore? The fear is real. You can literally see it in the numbers.
First up, oil. The price of Brent crude just surged, popping over $102 a barrel. That gets everyone really worried about inflation and what it could do to the economy.
Then you look at the VIX, Wall Street's fear index. It spiked above 26, which is basically a giant flashing red light for investor anxiety.
And to top it all off, the dollar index shot past 100 for the first time in almost a year. Why? Because when people get scared, they run to what they see as safe, and that's the US dollar. So you put these three together and you get a very clear picture of a market on edge.
So here's our game plan. We're going to start with that big macro storm, then zoom in to see how specific companies are handling the pressure. We'll even look at one company that's doing something completely different, and then we'll pull back out to get you set for the week ahead.
All right, let's get right into it. The number one story, the one driving everything else, is the conflict in the Middle East. This isn't just some background noise. It is the reason everyone is hitting the sell button and dialing back on risk.
And if you want to know why everyone's panicking, it boils down to this one tiny stretch of water, the Strait of Hormuz. Nearly a fifth of all the world's oil has to pass through there. So when Iran makes threats about keeping it closed, well, it sends a shockwave through the energy markets. And this isn't just about paying more at the pump. It's about the fear of stagflation. That ugly mix of a stalled economy and rising prices. It's just toxic.
So how does this fear actually show up in the market? Well, when investors get this nervous, they don't just sell everything and run for the hills. They rotate. They sell what they see as risky, and right now that's high-flying tech stocks, and they buy into safer, more defensive stuff. And that is exactly what happened this week.
And you can see that rotation happening right here, clear as day. Over on the left, you've got the energy giants, Exxon, Repsol, BP, all up for the week. And on the right, tech heavyweights like Meta and Nvidia are getting hit hard, and they're pulling down the whole S&P 500 with them. The money is literally flowing out of tech and into oil.
I mean, think about it. Even Nvidia, the undisputed king of the AI boom, couldn't dodge this. When the overall market mood turns this negative, pretty much every ship sinks a little lower. And the Nasdaq losing ground for a third straight week, that just tells you how much pressure the entire sector is under.
But here's the thing. It wasn't just the big picture macro stuff. For some of tech's biggest names, some pretty bad company-specific news dropped at the absolute worst possible time, just making everything feel that much worse. Let's look at a couple of perfect examples.
First, Adobe. Look, in a shaky market, investors want one thing above all: stability. And having a respected CEO who's been there forever is a huge part of that. So when Adobe announced that Shantanu Narayen was stepping down, it just threw a massive question mark over the company's entire future.
And boy, did the market react. The stock just got hammered, dropping almost 8% in one day. That's not just random market noise. That's a direct hit from some really tough internal news.
Okay, now let's talk about Meta. For months, the big buzz around the company has been about something called Project Avocado. It's supposed to be their next massive AI project, and it's absolutely crucial for their growth and for keeping up with everyone else.
And then, the announcement. The rollout is officially delayed. In this crazy AI arms race we're in, speed is everything. Any kind of delay is a huge deal. It gives your rivals a chance to catch up or even get ahead.
So, no surprise here, investors were not happy. They punished the stock, sending it down almost 4% for the week. It's another textbook case of a specific company problem making that big, scary macro noise sound even louder. Okay, so with all that doom and gloom, you'd think the whole tech sector was a sea of red, right? Well, not quite. In the middle of all of it, one tech company actually had an incredible week. It's a great story about how sometimes a really strong company-specific reason can just overpower all that market fear. Let's talk about Micron.
I mean, just look at this chart. It tells the whole story, doesn't it? Well, the S&P and the Nasdaq are bleeding. Micron is up over 5%. So what on earth is going on here? How did they manage to completely sidestep the sell-off that hit everyone else?
The answer is actually pretty simple, and it comes down to one big thing: earnings. Micron is set to report their earnings next week, and the chatter on the street, the buzz, is that it's going to be a monster quarter. And that optimism, that excitement, was so powerful it just created its own momentum, pulling the stock up even while the rest of the market was falling.
So that's where we've been. Now let's look at where we're going. Because after a week that was all about geopolitics, the focus is about to snap right back to some really key events that could totally change the direction of the market.
We've got a huge week coming up. Here's your cheat sheet. Monday, all eyes are on NVIDIA for their big GTC conference. We're expecting major AI news. Then Wednesday is a massive double feature. First, we get the Fed's interest rate decision, and then, after the market closes, we get that Micron earnings report everyone's been waiting for. Any one of these could be a big market mover.
And that really is the big question hanging over everything, isn't it? Is the market going to keep getting pushed around by these huge fears about war and oil? Or are powerful company stories, like what's happening with NVIDIA and Micron, going to take back control? It's a classic tug of war, and we're all about to find out which side wins. Thanks for tuning in.